I'll go out on the limb and I'll say Bitcoin 180,000 December 23rd or December 31st, 2026.
All right, where's the prediction market around that now? We'll be live in 2 seconds.
What is your price target for Bitcoin? Because Cardano blockchain founder predicted, as I said earlier, 250,000 by year end.
You know, I will predict Bitcoin. I wouldn't predict XRP. It's too close to home. But I think 200,000 is not unreasonable. I think before I've kind of said, 175 around there. I think people underestimate how the largest economy in the world, the United States, went from headwinds, hostility, to tailwinds. And
called crypto an index for money laundering. BlackRock
and thieves.
And thieves.
Yes.
Money laundering and thieves. Right. You now have the biggest Bitcoin ETF. So what happened here?
No, it's not tariffs. Remember, you had the Democratic shutdown, right? And what do you think happens to small business? The people who do business with the U.S. government, they know they're not getting paid, so they sort of slow down their projects. So you saw a little bit even of construction of small business down. So the Democratic shutdown hurt the numbers. And then remember, as you deport people, that's going to suppress private job numbers of small businesses. But they'll rebalance and they'll regrow. So I think this is just a near-term event. And you'll see as the numbers come through over the next couple of months, you'll see that all pass. And next year, the numbers are going to be fantastic. I think because the jobs of building in America, as Donald Trump talks about, President Trump talks about the huge construction projects coming to America, I think you're going to see GDP next year superb, over 4%.
I mean, you can definitely point to the shutdown, but we hear all the time that businesses do struggle with tariffs and the higher costs and the uncertainty that comes around that. And even if you don't think that that's happening, I mean, factory activity shrinking in November by the most in 4 months. We got a manufacturing report this week, and in that survey, they did cite tariffs as a reason. I mean, this was a sector that was supposed to be helped the most by what you're doing on the trade front.
Look, tariffs, you're overstating. The fact is, we know, because we've studied it, that prices don't move unless tariffs are above 15%. They just don't move at all, because the suppliers and the distributors eat the numbers, and that's why prices stay the same. You got inflation at the same levels, cut to below 3%. I mean, these are key numbers. You heard prices coming down, energy coming down. It's not tariffs. It's simply a matter of there's idiosyncrasies in October with the shutdown. I think you'll see that pass and things will go incredibly well next year. I think the huge amount of growth in factories, construction coming next year are going to be impressive. AI building is going to be amazing. We're going to roll out huge amounts of power. We're going to cut the price of power in America.
Yeah, this is a small firm story. This is even more than a small firm story, Joe. This is a mom and pop story. Because if you look at where the losses came in, it was for firms with headcount under 50. And you take that and you extrapolate it to the industries, those are the same industries. Construction, for example, where there are a lot of small firms. And so when you think about what small firms are dealing with, if you put your mind into the space of a small firm owner, they're not going to raise their hand and say, we're cutting by 10%. They're just not going to replace that retired worker. They are just going to let attrition take care of this issue for them. They are going to have a hiring freeze. They may not hire a teenager or two in the bakery over the holiday season. They're going to make these small changes that add up to a lot, because 44% of U.S. workers work in these mom and pop establishments.
What's ailing them? What is ailing them? What's the problem? Tariffs?
You used to be able to look at your consumer demand and your traffic and make the story. But if you're a small firm owner today, you have to think about your supplier. You have to think about the Supreme Court decision that will kind of pave the way for tariffs. You're going to have to think about all of these things instead of just your own foot traffic. And so what that means is that you may delay your decision making when it comes to hiring. You don't want to pass along those price increases to the consumer. And there's no evidence that we're seeing small firms do that in lockstep. What they're doing is they're absorbing it, they're taking a profit hit, and they may be delaying or curtailing hiring.
So how can bigger companies, they just have lawyers or something? How does it work?
They have more options. They can change suppliers. The fixed costs for small firms, or variable costs for large firms. They can invest broadly. They can be price dictators when it comes to their suppliers. And you have to also understand where we are in terms of the inflation story. It's not just inflation growth. It is the cumulative effect of 24% increases in price levels in the last 5 years. So even modest inflation from here is on top of really high price increases over the last several years.
Welcome to the Crypto Teacher. Don't forget to like and subscribe to the channel. And you know I come back with that video just to make you think. And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have Brad Garlinghouse with his Bitcoin prediction for next year. And we know all the predictions this year was 200,000, 250,000. But guys, we know we don't worry about predictions. We watch the Fed. And now the Fed has stepped in. And why? Because Japan is about to make that move. And we have BlackRock's Larry Fink, Vanguard, JP Morgan. They all told you Bitcoin was going nowhere. It should be illegal. But behind closed doors, they're making profits off of it. Remember, these billionaires, fund managers, they're never going to tell you the truth. But they know the sheep listen to them every single time. And we know they love that Hegelian dialectic, and it is undefeated. And remember, the Crypto Teacher told you. And we have Lucknock speaking about these ADP numbers. And of course, what does he say? It was a democratic shutdown. Again, guys, the Hegelian dialectic. They always are going to play it. But we know all these layoffs are done by design. And they keep telling you the plan, but of course this sheep is not understanding it. They keep saying that 2026 to 2029, this economy is going to be booming. And why are they saying that? Because the sheep are going to be out of work and the machines are going to take over the job. And that's going to allow these corporations to increase productivity, which inflation is going to drop like a rock. And since the sheep don't understand the fourth industrial revolution, the first question they have is, if we're out of work, how are they going to get paid? Guys, this was never about money. This is about power, because once you take money and make it digital, it's not real. Once you make all these products tokenized and put them on blockchain, it's not real. They have all the money, all the gold, all the power. They printed paper off the printing press and brought up everything of value. And that's the reason why it's so important for you to get back to the creator, so therefore you can start creating. Never forget that the Most High gives you work. The devil gives you a job. The book of Job, same thing. Right now you're being persecuted on a daily basis. And I'm not saying leave your job, but if you're going to give 8 hours to your job, give 12 hours to the Most High, and I guarantee you, you'll start producing even more. And remember, the Crypto Teacher told you. And we have these ADP numbers coming in worse, but then on top of it, we have all this inflation. We're up 20, 30%, and we're going to keep getting inflation. Prices are not going to come down just yet until they activate these machines. Guys, remember, this is a plan. It moves in phases. And we know they cause a problem, wait for the reaction, and run in with the solution that they had ready 10, 20 years ago. The divide and conquer works every single time. While the people fight each other, Democrat versus Republican, white versus black, the divide and conquer, and you can always poke that bear. And remember, the Crypto Teacher told you. And right now we have the dollar strong, but we know the only reason why the dollar came back is because Japan hasn't made a move. And now all of a sudden we're hearing mainstream media speak about the repo more, treasuries more, Japan more, because we're getting closer to that time. And what is that time? That's right, that big black swan. They need something big enough to distract the sheep while they build. And remember, the crypto teacher told you. And we have the Fed meeting next week, and most likely they will cut rates. But if the bond market does not react for this long end, we know we're going to be in trouble later. Yes, the Fed is stepping in right now, maintaining. But as Japan starts to get into this rate hiking cycle, liquidity is going to start drying up. And we know what happens when liquidity dries up, especially when you have this type of leverage out there. We have companies that are $3, $4, and $5 trillion for no reason. We have plenty of crypto projects that shouldn't be. We have plenty of these ETFs that shouldn't be. As soon as liquidity dries up, everything ends in the hands of who? That's right, the Fed. And never forget, this is a plan that moves in phases. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Look, I think that the dollar weakness is a function of the fact that, our view that, the U.S. economy and markets are less exceptional than they have been in the past. And as a result of that, the dollar no longer warrants its very rich valuation. We've already seen that valuation erode to a significant extent, so far this year. We think there is more to go in that. And that's just a reflection of the fact that we think the Fed is going to be easing policy more in December, again next year. That's something I think that is consistent with some of the views that the administration has expressed. And on the other hand, we don't have quite as much easing priced into the rest of the major G10 markets, with the exception of the UK. So it's really the US where we are seeing this combination of somewhat softer data and more significant, deeper policy easing, which we think will keep the dollar on the back foot.
And of course, I imagine that if Kevin Hassett were to be the next Fed chair, that wouldn't change your thesis in the slightest. It would add weight to it, in fact.
Yeah, I think it's one of the additional reasons why the skew to rates in the U.S. might be, more towards deeper cuts rather than the other side of the distribution. I think that there are a number of forces pushing in that direction, the weakness in the economy, the fact that, you might also see some of the worst tariff impacts on inflation pass into the rearview mirror as you go through, the early part of next year. And a reshaped Fed might add to that impulse in direction of weaker rates and a softer dollar.
That the labor market is weakening. Just how much? It's kind of hard to tell. Look at a 12-hour chart of 10s. You can clearly see the weak data took its toll early, but then yields turned up briefly. Why? Well, our last guest mentioned it, and I use this chart a lot. Let's put the S&P futures on top of 10-year, and what you'll notice is that as the S&Ps started to rumble higher, it definitely dragged rates along with it. That's happened about 10:20 Eastern, but then it lost steam and it separated again. So you could actually say that the equities pulled rates up, but then the lingering weakness in that jobs data took its toll, and it ultimately is now, as you see, 3 basis points deterioration across all maturities. And finally, this is a chart going back 18 years of Japanese 10-year, another fresh high yield close.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust. And we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Crypto Teacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.